Happy Thursday. How you doing out there? All is good. What happened? It doesn't work now? Let me see. They're messing with us? Let me see. Sounds right there. Sounds good. Hope everybody's doing well today. I hope you can hear me. Trent says, let's go, man. Tron, everybody good? I think it sounds great. No? What? Aw. I don't know what to do, man. Tell you what I can try to do for you. Hold on now. Huh? Doing well. Sounds good. They all say, it's your bad, man. It's your fault. Little cracky. Yeah. All right. No? Oh, man. What should we do? What should we do, man? Hey, I got stuff here, so I'm going to go through it. I'm going to attempt to just bring this down a little bit here so this doesn't mess with you, right? But it's just going to be poppy. That's it. We our little pep talk didn't go well. We're winners. It was good. We tested it. All was good. It has something to do with that, man. But we're going to work with it because we're here. And we'll probably just change out computers or whatever there. But we actually have a lot to cover. If you're interested, we're financial advisors that suck at audio, but we're good at numbers. And I like covering the stock market, right? So we're just going to keep going here, play with some things, see what we can do. Wine and Wealth tonight. If you're one of our clients, we will be doing that over there with the streaming computer that appears to work. And we'll be talking about things that I need to know about you as your life progresses, trying to make it more that clients can understand, hey, there's things that we can help with. Maybe you didn't know, things that we want to help with. Anyways, we're looking at the stock market here today. GDP comes out. That's 2 quarters of negative GDP, but it no longer signals a recession. So the National Bureau of Economic Research, they'll make the call. It won't be anytime soon, but they'll make the call on whether this was a recession or not. But all the talking heads, everybody that has to do with economics and is out there and everything said, hey, it's not a recession. We don't think this is a recession. It's a little dangerous, right? Because that means everything you were taught in high school, everything you were taught in college, your economics classes, we're going to change that. Right? It doesn't apply anymore. And that's unfortunate, right? Because we spend our time doing that there. I think that's dangerous that you're teaching one thing, we all agree we're going along with something, and then, we're going to just change it. Recession, or GDP, is the value of all of our output, all of it, right, minus the value of all of our consumption, right? So somebody's told you that along the way. You had a class and you went through that. But we're no longer using that, so I wonder if they'll change the books or anything there. The Fed, reading through some of the transcripts, things that I may have missed yesterday, they said, hey, we're going to offer less clear guidance on our rate decisions there, because I don't know why, but they said we're not going to be as clear as we have been in the past. And again, when they were asked the question, how'd you decide on 0.75%? They couldn't answer it. Powell just dodged the question and said, let's talk about the next rate hike that we may be doing. So that's unfortunate, right? Because it makes it seem like we're just kind of winging it here, trying to, we don't know if 0.5%'s good, 1%'s good. But that's out of the way. We're going to see what happens there. I noticed that Washington started shifting the blame towards Powell a little bit, so they were looking for a scapegoat there. It's all politics. And both sides will do the same thing. It's just the game that we play. It's the world that we live in. And whenever Republicans have the White House again, they're going to do the same thing. I mean, it's, you can pick your favorite side, but we all want to look good, right? Before we get into the market, you got the budget reconciliation bill. Looks like it's alive again. I briefly talked about this about 2 weeks ago, and it looked like it was dead. Senator Joe Manchin had some issues with it there, but it looks like he's on board now. The headlines that you're going to see are not market related, so it's nothing that I really talk about. Prescription drug reform, things like that. The carried interest loophole, right? Trying to get rid of that once and for all. But under the surface, the things that do affect you there, to pay for this budget reconciliation bill, it's going to be a 15% corporate minimum tax. So that's a 15% minimum tax on businesses out there. That could include you as well. So when you look at stocks, you're going to have to start factoring that in, right? Stocks that don't typically pay a lot in taxes, well, it's going to become part of their expense should that pass. And I just bring that up just to kind of throw that out there, that as we start analyzing things fundamentally, that could be something that changes along the way. Whether it's good or bad, I can't imagine it being great, right? But that's part of it. So we'll see how that goes. We'll keep up with that one for you as well. If we go over to the charts page, there we go. Here is, well, I'm showing the S&P. Got a nice little rally back above the 50-day. Again, it is not behaving like previous Fed days. That's awesome. The market says this time is definitely different. And so that's okay. The bulls were happy to buy here today. This now, careful. This is where your opinion can get in the way of your investments. This is going to sound super elementary, but how many of you believe that the market is about to fall again and aggressively? How many of you feel like, oh, they said no recession, but things are really getting worse out there little by little, right? That's okay. You read something and you make a decision, and we all do that. But a lot of people believe that, oh my God, the worst is yet to come. You're wrong, right? And it's proven by the charts, right? So your belief of, I'm not buying this market, that is not right. That is a bear market rally that's going to get sucked away from us and everything. Well, that could be true, but for the moment, you're proven wrong. And so what happens is, little by little, this gets away from you. Maybe it is the turn of the market, right? I don't honestly know. Maybe we do start an uptrend here that just takes us back slowly over time back to the 200-day. And then you're forced to buy in later and go, shoot, I was wrong. So remember, your opinion about what you see locally, regionally, and in the data that you look at is one thing, but what people are doing with the data that we all have could leave you in the dust, right? I see this so often where people say, okay, fine. When we fall back to 3,800, I'm interested, right? I think the market will fall and pull back. Well, I mean, that's a good, I hope you get that. But for the moment, the tide is moving the other way. Your opinion is wrong, right? So you got to be careful of that, because I sort of believe like there's no reason for the market to go back to all-time highs. I could slowly be proven wrong over time. So my opinion needs to stay out of the way. We got to just follow the data there. Anyways, I rambled. Let's look at the NASDAQ here, working its way out of a bear market. It would seem there. The Fed obviously helping with that. Tech stocks helping with that. It's only down 21.5% year to date. We're still in a bear market, but that's not too bad. It was down over 30%. So you look at that. Right, we're happy with that. Any NASDAQ and index investor or whoever does that, you're happy. Right, you got 10% back just like that. So looking good there. If we, let's go over here. Looking at the Dow, back out of correction territory there. It's down, it's down 10% year to date. So you call it a correction or whatever, but it's doing the same thing. Getting a lot of help there in the recent couple weeks. Very nice. If we look at crude oil, basically flat on the day, nothing to talk about there. I'll keep the same comments that I've had. I want to get to some of the stocks because there's a lot of stocks moving around here, so I'm just going over things briefly. I do want to point out the 10-year. You likely saw that on TV or something or whatever. Rates are dropping quick, right? You got a really sharp move lower here today. That's a big move for the bond market. Normally, it's not that big of a mover. We're back to April rates here of about 2.7%. You could use the bonds future chart to just look over and say, well, it's about right here, right? We're somewhere here beginning of April. Nonetheless, 2.7%. To give you an idea of how fast this was, actually, we've shaved off over almost 1% in just about 6 weeks. That's not normal, right? So rates coming down quickly. Good news if you're trying to do some things there and you need credit of some kind or you're willing to take on some debt. Elsewhere, let's take a look. Anything related to interest rates has been doing well. I use utilities as an example. Big move here in utilities. Had a few earnings there as well. And real estate, big bounce off of lows. Anything REIT related, people that go out, take on debt to buy apartment complexes, hotels, whatever it is they do, assisted living facilities, big performers here today. You like to see that. Industrials were also in the top 3 today, came in 3rd place, back above the 50-day. Strong recovery there because why? If you want to call it a recession, call it a recession, but either way, it's not that bad. Right, so yeah, we could say recession if we all want to change our mind and go with the original, not definition, but the original plan that we usually follow. Then you go, okay, well, it's actually not that bad of a recession. So sure, label it that if you want, but yeah, it's not the end of the world. This just seems like a light recession, which is good news, right? For the economy, good news for all of us. Let's get into some stocks here. Oh, I did that yesterday and it messed it up, so let's go. And maybe that'll fix it today, you know? No, I ain't going to do it. Okay. Let's move on here. Amazon. That's earnings after hours. It's trading about 137, 138. That's going to be right in here, not quite to the 200-day. Maybe that leaves it some room to run up tomorrow. They beat on sales. Sales were their big sales beat there. Remember, the second quarter is their second best quarter historically in terms of reporting earnings, so not too surprising there. Last quarter gapped down 14%. This quarter's gapping up double digits, so think about what happens. Do you buy that? Think about all these people over here that owned Amazon through the quiet period. Remember, if we were looking at this for a while going, it's not doing anything. Right in here. All this quiet period where it wasn't doing. The market kept going, but it wasn't playing along, right? So now what happens? All those people got sucked in with that drop, the 14% drop on earnings. Oh, no, what am I going to do? I'm going to sit here and hold. Yeah, probably what a lot of people did. I'm going to sit and hold and hope for a bounce. Now we're back up here. You have all those people over there going, okay, well, maybe I bought at 160 to get out at 140. It's not so bad. So you're going to have that selling pressure going into tomorrow. It's going to take a while to chew through a lot of that. But for the moment, good for them. Good earnings break there. Oh, there's no real new highs or lows today because there were 6 of them, 6 new highs, 5 new lows, and they were all earnings related and a lot of smaller names that don't get followed too much. I don't know if you're into that stuff. I like looking at stocks that are maybe not so interesting and people don't know too much about. I like doing that every once in a while. Simulations Plus is one of them. Really interesting company and growing pretty quickly. But anyways, other than that, not too much to cover there. I'm going to go over to Meta or Facebook. This was not like a Mondelez or a Chipotle. Have you been watching the past couple days? Huh? Oh, I'm wearing headphones. Yeah. This was not like them. So we talked, and it's not in the same category, I get it, right? But I'm trying to make a reference to their earnings report to make it simple to understand. So for Meta, ad impressions were up 15% year over year. Good, awesome, love to see that. We only factored in like 10%. So the Wall Street was expecting 10, we got 15, very excited that. Prices per ad fell quite hard, right? Did I write it down? Fell 14%. We were expecting 9.7 there, right? They said the saturated ad market and daily users were about 1% below what had been expected there across their whole family of apps, right? So what do we have? More, think of it as like Chipotle, right? We have higher costs, we have higher sales, but it's not offsetting there. So we don't have our margin growth like we wanted to there. They have higher ad impressions, less cost or less revenue per impression because costs are competitive now. And so they're not able to show that growth. That was the only difference there. But other than that, a lot of decent news there for the future for Meta, besides the declining active users, of course. They will hopefully solve for that. Ford, making a big move into the EV market there. They had a couple comments that it's really hard to find raw materials to make the components, the batteries, that go into our Ford. They said that of everything they need, they can source about 50% of it right now. The Democratic Republic of Congo, did I say that right? That's where the majority of the major components of batteries comes from, believe it or not. They're the biggest exporter in the whole world. Could you point to it on a map, by the way? I couldn't. I had to look it up. Anyways, it was a truthfully massive beat for them, for Ford. They beat on earnings by 51%. So usually it's like, we beat by 3%. Way to go, right? 51% there. Remember last week they said they're going to cut their gas division, the typical traditional gasoline-powered cars there, cut that division down so that they can focus on EV growth over the coming decade there. Sales were higher by about 10% more than expected. $4 billion in annual costs just from commodity prices. But why'd the stock go higher? You had higher costs. Able to raise prices. This was like Chipotle. This was like Mondelez. We have higher costs, but we jacked up our prices, and we still saw the demand there, more than offset our costs. Good for them. Comes out of a downtrend here, it looks like, trading at $14. You have to assume that that was the temporary low there in Ford if you're excited about that. And they raised their dividend, too. I think they jacked it up by 50% or something like that. So good for them. Unless you're not a Ford fan. Best Buy dropped guidance for their sales, down 13% year over year. The stock was still higher on the day. What they did, they were clever, the way they said it. What happened? During COVID, we all went home. The government sent us all money. we didn't have as much as expenses because we're just sitting there, so we had more disposable income. We bought a new TV. We bought a PlayStation or whatever the kids play these days, right? So the influx of demand at Best Buy shot up more than expected. You know how I point out stocks that go too far too fast? They always pull back. Commodities like oil, too far too fast, they always pull back. Doesn't matter what you're looking at. They always go up, they pull back too fast. Housing prices, they went up too fast, they will pull back. It doesn't mean there's a crash. It doesn't mean we fall 50%. It just means they take a break, right? So we saw that, and what Best Buy said is, that was great for us. If we could have annualized that, we'd have had a great full year. But we loaded up on the bulk of our sales during the last part of COVID there, and so now we have this mean reversion. That was the fancy word they chose to use there, that it's not horrible. We're just not hitting that growth trajectory because everybody went back to work. We went traveling. We have other things that we want to do besides just buy TVs and whatnot. So they use mean reversion quite a bit in their earnings. Good, fine. United Rentals typically doesn't get a lot of attention here, but this is a good indication of how the construction market is doing and a lot of the oil industry, right? Because they use a lot of their products, they rent a lot of their products, then they buy a lot of their products there. Anyways, the earnings up 22% more than expected there. Revenue beat as well. Rental revenues, which is this their core business. You've seen one, right, in your town there. Incredibly strong. Good for them. So nice little bounce for United Rentals, up 6% on the day. Qualcomm is semiconductor. You know what's happening going on there. They are a beneficiary of the CHIPS Act, which Biden said Pelosi should be able to get done here very quickly. Is $52 billion spread out over various different ways there. These guys will get a chunk of that one there. What they did is they said, look, our earnings were an overall beat. We're lowering our guidance pending the money that we may get from the government. That's it, right? We want to rely on the government. So investors didn't like that there. That's why you see it down about 4% on the day. A couple more, and I'll get to your questions if you have them. Keurig. This is Keurig Dr. Pepper here. Keurig, it's the same thing. The whole earnings, right? We talked about this before earnings season started, that everybody's going to focus on profit margins, profit margin growth, right? This is exactly what's happening here. They see their costs go up, so they raise their prices to offset those costs. That was it. They didn't quite do it, to be honest. I don't know what happened with the stock that it went up. They raised their prices to offset their costs. They didn't have enough sales to offset their total costs. So I don't know. I didn't catch anything else there. Margins have suffered just a little bit. Okay, Etsy. This is not, Etsy and Roku, yep. So Etsy up 10% on the day was a big beat for them. Revenue was up 10%. Why? Do you follow individual stocks? I just like reading about all these different stocks. I like to look at their transcripts, so I'm one of those that goes to websites, pulls up the investor relations page, and looks at all the transcripts. It was a big beat for them because they raised their take rate. I don't know what you want to call it, right? Their seller fee. They used to take 5%. I think that was the blended average, 5%. Then they said in April or March or something, we're going to make it 6.5%, right? That's when everybody said they're going to protest. Didn't work. They still jacked it up there. 6.5%. That's the reason they beat on earnings. They took more money from the sellers. Whether that's good or bad, I don't know. It's great for the stock. It's up 10% today. And that earned them a slew of upgrades from Truist, Jefferies, D.A. Davidson, Raymond James, and a whole bunch more. I'm not going to read off because you probably don't find that exciting. So very good for them. Lastly, here we go. Roku, after hours. Nothing looks good about what they said. I briefly made it through there because I was going through everything else as well. Earnings missed. Sales missed, costs went up. Going forward, they say, we don't see anything changing. This is just going to look horrible for us. Kitchen sink. They threw in the kitchen sink there. The stock is down to $63. That's going to be more than double digits there. That's like 20 plus, what was that? 20 plus percent to the downside, 23, something like that. That's going to be new lows also, I believe. Yeah, that'll be new lows breaking down. What happens here? Well, what's happening right now? It's at new lows. Everybody is underwater. No question. There's nobody here that has a profit. It hits new lows. What just happened? This is my lesson here for the day. You have a tight range. If you looked at this and you said, I'll give it a chance. I will buy Roku. Maybe they'll turn the corner. Maybe it will get bought out. Maybe something good will happen. You had a very limited risk, right? The risk was that it breaks to new lows. Call it 70 bucks because I'm going to try to do some easy math here. So $70 is your risk. You bought somewhere along the way, I'm going to say 90. You have $20 worth of risk, right? The reward is attractive. Every $20 that it moves up is 1 times your risk, right? So you had the chance to say, if I risk 20 bucks, right? And, or let's just say you bought 100 shares. I don't know. I'm going to use an example here. Use 100 shares. For every 20 bucks it goes up, I made exactly what I risked. They usually call it a risk unit. All the traders call it that. So you go, oh, cool. I don't have to have it go very far. If it just gets back to the 200-day, that's nice. It's good risk. What just happened? You lost. It's okay. You hit the stop point that you decided to get out at. All right, no problem with that. You sell. Times that by everybody that owns the stock over the last couple of months. You got that volume pressing into the stock. Tomorrow, when people wake up and they go, oh, why is my Roku position down so much? They're going to sell. That's more than I wanted to lose. I risked 20, I'm down 20, I'm out, right? Do you invest like that? There are 2 ways to invest. I've done classes on this, but there are 2 ways to invest where you use percentages or you use risk units. I can't think of what it's called at the moment. And so I did a class on each one. What's the difference? How do you justify win-loss ratios? How do you make it so that that loss right there doesn't just blow you out of the water and you got to go get a real job and do all that? Anyways, I wanted to share that. AbbVie tomorrow, AstraZeneca, Colgate, sorry, lost my spot. Chevron, Grainger Worldwide, Procter & Gamble, Weyerhaeuser, ExxonMobil, not too much, right? So wrapping up the week with a little wind down in earnings there, it looks like. So let's see what questions you have there, and maybe between, maybe this doesn't sound so bad, huh? In here, it sounds amazing. So clearly the issue is getting it over to you guys. Yep. I didn't catch all of Yellen's conference today. She said we're not in a recession. I'm like, all right, yeah. It's just what they're focused on right now. Yeah. Any early opinion on the market impact of a new $1 trillion spending bill? It's not technical. Now, look, this is me not being biased, right? I really don't like politics. I don't like either side. It frustrates me how they can't just get things done. But it's not really a spending bill, right? It's sad that they call it that because this is their chance to actually call it something else. But it's not technically a spending bill because of how they're raising the money. So, yeah. My thoughts about it, though, the 15% corporate tax, I'm curious to see how that's going to affect some of the bigger names that may try other tactics to not pay as much in tax. But I know that's a big sticking point for them. That raises like 40% of what they're hoping to spend. So I don't know. I think there's probably a little bit of a debate on that one there. But yeah, other than that, yeah, it's not like they're going to tax you every time you want to go into Disneyland. Did you guys see that? So you know I wasn't making that up. I saw it everywhere today. I missed the. Can you call it woke economics? Unfortunately, it's frustrating that there's a lot of topics right now where both sides are saying, oh, yeah, it normally works like that, but don't trust the science, don't trust the economics, don't trust the economist, don't trust the Treasury Secretary, or trust the Treasury Secretary. It's like, this is a lot going on where what we were taught, obviously, put through school is changing. It's like, what are we doing here? So every time something comes up, we can just say, yeah, but no, it's not like that. Don't worry about it. It's not the same thing. That part bothers me. Yeah. The CHIPS Act makes no sense to me. Well, it makes no sense in terms of supporting chip companies to make their chips here. Right? The government doesn't need to hand money or incentivize with money to get people to buy electric vehicles. There's subsidies for electric vehicles in there, 15 grand for company EVs, 7,500 for if you buy a new electric vehicle, they'll give you 7,500 bucks off as an incentive, and I think 4,000 if you buy a used one. Don't hold me to that. We don't need to incentivize people to buy EV products. People love them, clearly. Ford's out there saying, yeah, we got more reservations than we know what to do with. So people that want to do that are very excited to do that and seem to like Ford, Tesla, and a lot of the products coming out. Let's just let them be excited, right? Elon Musk did a great job. He made it cool to want to have a Tesla. Look at the demand there. It's great. If there was a demand issue and it was hard to sell people on getting EV products and the stocks were suffering and it's because of cost, all right, you see where that works overseas and stuff. And sometimes it plays out, sometimes it doesn't. Electric vehicles are too expensive. Yeah, they're pricey. I'll give you that. I like the idea, from my perspective, I like the idea of not having the headache of a standard internal combustion engine and all the features that go along with it, but not for that price, Yeah. And Kareem's got a good comment as well. Yeah, we can't all drive electric cars. It can't happen. So people that want to do that, go do that. People that want to have, I don't know, Nissan Rover or whatever they're called, okay, go drive one of those. You want to try hydrogen? Have at it. You know what I mean? Solar's got a long way to go, but yeah, go for it. I just don't know why we have to do that. People will gravitate. Yeah. I've heard that about California. They have already have issues. Texas too, I believe, but they have some nasty summers. I'm not sure what the deal is there. Yeah, but I don't know. If you like them, what's the problem? Yeah. Subsidy does help. You said it was but it's think about what happens there. It's a subsidy being paid for by any minimum taxed corporation. That could be you. You could have your own business. Just doesn't seem like we need the subsidy. What's the incentive then for them to get to a lower production cost vehicle? Tesla's got every incentive on the planet right now to get to a really, hopefully, competitive price. Let everybody compete. Yeah. DG, we do the old style. When I was a kid, I had a go-kart, and I was so excited. I got a go-kart. Didn't have an engine in it. You had to move your feet and like pedal along and stuff. Yeah. Would I consider running for the chair of the Federal Reserve? No, they wouldn't like my language. I think Jerome Powell does a great job being clear, consistent, pretty level-headed. You can't fire him up. All right. Yellen did good at that too, you know what I mean? But the Fed never focused on gas prices. That kills me. Now they're focused on gas prices. What? Yeah. Anyways, really apologize about the audio. It sounds amazing. You got to hear it in here. Sounds amazing, right? But we'll try again. Hey, Wine and Wealth later. That will work perfectly because it always does. We do a good job there. Enjoy the rest of your day or evening. Thanks for. Oh, thank you. Oh man, I appreciate it. Yeah. Oh, wow. That's too kind of you guys. Thank you. Yeah. All right. We'll see you. Oh, stop it, please. We'll see you later. That's it.